In this video, I will tell you what to look at before you buy a stock for a greater return, and I will provide you some tips on how to analyze a stock. As an investor, it's impossible to evaluate all the public companies in the world. I always ask myself, when I start investing, where do you look to find stocks to buy? What do you look for? In all the information I found online on Google or YouTube, they didn't explain anything step by step, and they didn't explain the reason for that choice. In this video, I will try to teach you investing as I would to myself. I wish I had known this information earlier. Let's jump into the video, and if you stay to the end, I will give you some tips in what I invest. Hi guys, welcome to InvestVibes. Back in the 1950s, when Warren Buffett started his investing journey, he went through thousands of books and newspapers to find his investment ideas. But today, we are lucky because we live in the digital era. We have lots of tools online, and we find all the information in a second. When I choose my stocks, I start with a company I know and understand its business model. How do they make money? What product do they have? What service do they offer? How is that product going to perform in the future? In what country do they operate? What competition there is in that market? All the informations are easy to find online. If you want to check the information you find out, go to a friend or family member and tell him about the investment you are about to make. If you can answer all the questions they have, you may know enough. Warren Buffett once said, "Never invest in a business you cannot understand." The second thing to look at is the background of that company and to check how they performed over time. If a company performed historically well over time is not the sole reason to buy or not to buy. But it can help lend some insight into what you can expect. I use Google Finance and Yahoo Finance because allow investors to research historical data, such as price charts that go back several decades. Users can also compare stocks' historical data with one another. It's important to notice that if a company performed well before, doesn't guarantee that it's going to perform well in the future. The third thing I look at is the stock valuation. Is the company at a good price to buy? Is it overvalued? Is it undervalued? How can you check that? I personally look at the price to earnings ratio. The price to earnings ratio is the ratio for valuing a company that measures its current share price relative to its earnings per share. How do you calculate price to earnings ratio? It's very simple. You must simply divide the current stock price by the earnings per share. Let's take, for example, Apple. The current price is 153.83 and earnings per share 6.12. If we divide 153.83 by 6.12, the price to earnings ratio is 25.14. If the company has a high price to earnings, the company may be overvalued. Before you jump into the decision, it's better to understand your risk tolerance and to do your research. Don't buy just because it's popular. Warren Buffett said, "You can't buy something that is popular and do well."
If you'd been a pension fund and you put $1 million into the S&P 500 at that time and reinvested it, during my investing lifetime, that million would have turned into 5.3 billion. You would have gotten, for every dollar you put in, you've gotten over $5,000 without ever reading a headline, an annual report. You didn't have to know accounting. You just had to believe in America. And you didn't have to pick the right stock. You just picked America.
Experts generally suggest that individual stock picks make up only about 5 to 10 of your overall investment portfolio. For long-term guys, I personally invest in ETFs. An ETF is a secure investment that operates more like a mutual fund. An ETF can contain all types of investments, stocks, commodities, or bonds, so they are well diversified. I personally invest a sum of money in iShares MSCI World every month. This ETF produced an average of 9 year-over-year since it was founded. It's diversified worldwide and includes companies like Apple, Microsoft, Amazon. In long time, I think it's a good investment because you just buy and you don't have to worry. How do you choose what stocks to buy? Let me know in the comments below. Thanks for watching, guys. If you like this video, don't forget to subscribe and hit the like button so I can make more content like this. See you in the next video.